All right, what's up, everybody? Sorry about not being able to go live yesterday. We're going to give it a shot today. So, how's everybody doing on this fantastic Wednesday morning? The markets are open, so let's run and take a look at all of them. The reason I got XLP pulled up real quick is because I did take a long position on it yesterday, and I also took a short position on GIS. Um, for some reason, hang on a second. This is not. Right. Okie dokie. And I'm just looking for more positions to get into there. So we'll see how those two end up working out. I closed the IWM long because we were at the top of the weekly expected range. Let me see here. Let's pull this over here. Let's make this big real quick. Wait a minute. There it is. All right, so let's do this. IWM. Yeah. Well, this is broken. This is broken. Anyway, oh, I see why. There we go. All right. So you can see Monday opened and we traded right up to the weekly expected. And then yesterday when we opened, price traded up just a little bit on the open and then started to roll over. So I closed out that position. We entered that long position down here on this candle's low. So from 188.15 up to 198.04. Fantastic trade. So that's why that one is closed over there. So now I'm just looking to get more inventory. And yesterday I was looking through the whole S&P 500 trying to find something that looked good. I do know that there is a stock screener here, but I for some reason cannot get it to work with the parameters that I am searching for. Those parameters that I am searching for would be retesting the 50 from above, right? And then also to be real close to the 21 exponential like this one is, right? So we did almost hit overbought a couple times on this. So this is looking pretty decent now that the moving average structure is basically getting fixed as we're speaking. And if we keep continuing to move higher, we're going to get a golden cross on this. And this is just a straight call. It's not a spread position. So if you wanted to buy a call on it today, you could. Actually, you could do it right now if you wanted to, because you're getting that pullback. Now, I'm not saying that you should, obviously, because I don't know what's going to happen with it. I have a call on it, so we'll see what happens. All I'm looking for is for this to continue to slowly move higher. The main reason why is because unless you are not privy to what's going on the markets, we're hitting all-time highs on a daily basis. So this was a breach of the all-time high on the SPX. And then the very next day was a fresh all-time high, even though it closed down on the day. Yesterday, the futures closed on an all-time high. And then you can see now today we are gapping at a fresh all-time high. So you're making fresh all-time highs. This is what is called bullish continuation. All right. So you typically don't want to be looking to short things that are moving to the upside, right? You want to look for longs. In the overall marketplace, if we go over to the index products real quick and pull up RSP, you'll see that the overall marketplace has not hit. Like this is the Invesco S&P 500 equal weighted ETF. essentially what that means is Apple and Microsoft and the big monsters of tech, if you will, are not pushing this up. Every stock in this ETF has the exact same weighting, and this shows you market breadth, if you will. How good is the market performing? Like if this is down and the S&P 500 was making fresh all-time highs, I'd be very, very, very cautious about looking for long positions, but this is up. So as long as this remains up, I like it, and I like the market to continue higher until we start actually getting rate cuts, which at this point in time, I'm pretty sure we're not going to see any until at least May, maybe even later than that. Yeah, this is Jan, March. They got March is a little bit higher, but this was higher over here like 2 days ago. So we'll see, but we know we probably won't get a cut in Q1. And as long as the market's going could continue to go higher after the cut happens, we know that we are in a bear steepening right now as far as the yield curve inversion goes, and that is typically bullish for stocks, not bonds, but stocks. So we'll see if this will continue to go up. And if that is the case, then all of the sectors over here that are lagging, you can see here the XLP is lagging, consumer staples. We'll see if we do actually get that move higher. So that's what I'm hoping will happen. Basically, what I'm looking for is seeing how the S&P 500 is making fresh all-time highs. I don't want to be in these sectors that are already ripping faces off, right? Like the XLK is not only making fresh all-time highs, but it is going, baby. It's going, gone. Like that's a home run out of there. So what I'm thinking is investors are going to go into these other sectors to try to generate alpha. Some of the lagging sectors that have not completely caught up to the rest of the marketplace yet. And we can see healthcare has gotten that burst to the upside. So that's basically what I'm looking for the XLP to do, right? Is to just go higher. Another sector that we could potentially look to buy would be the XLE, which is the energy sector. Let me pull up oil. Yeah, oil looks okay. Let's go. Let me pull it up over here on the main screen. Boop boop boop. Yeah, oil. I mean, obviously its structure is bearish with the moving averages and everything. You're under the 50 and all that. Oh, you're back above the 50. Never mind. Yeah, so we could potentially look to buy XLE. On a pullback. I don't want to buy it when it's already moving to the upside. I want to buy it on like a red day. Like this would have been the best day to buy it. It still isn't really in this it's not a buying. There's no buy signal on it as far as technicals are concerned. This still looks very bearish, and it looks like something that we would be looking to take a short on, but energy is a sector in the S&P 500, so I do want to take that. All right. So yeah, probably on a down day I'll look to buy XLE. The communication sector is rocking and rolling. It's doing pretty damn good. It's not making fresh all-time highs yet, but as far as growth, it's done good. As far as up or down. And then here's the retail ETF. This one I'm not so sure about because even though CPI is down, we got core PCE this Friday. That's going to tell us a lot more about what's actually going on. And yesterday we were actually looking for the dollar to roll over, but yesterday it traded up on the day and closed higher. But look at what it's doing today. So kind of figured that was going to happen, but it was hard to get a position. So what we were looking for, if you're not part of, if you're not a channel member and you don't get our live streams, USDCHF is a short that we were looking to take and get into. Yesterday I took the trade, but I got stopped out. I still like this lower, but obviously I'm not shorting it down here. So on a pullback on the USDCHF, we will look to get short. I know what you're gonna say. It's a buy signal, Heath. But no, it's not. 80% of retail is long this. All right. And typically, anytime 80% of retail is long anything, you don't want to be long that asset. All right. Because retail is generally wrong. They usually lose money. So, unfortunately, today, this trade would be fabulous. But unfortunately, I woke up this morning and it had already taken place. You can see that it started to make its move yesterday around the Asian session, and I don't trade during the Asian session, so I basically left it alone. But I do like your USD so this is a trade that you need to put on your watch list if you do trade FX. All right, and wait for a pullback and then look for resistance, some resistance to hold. Well, what resistance? I don't know, but let's see here. Damn it. So we could have looked to potentially watch December's open. It didn't get up there, but essentially all it did was made a fresh weekly high yesterday, and now it's rolling over. So that's typically what we look for in the middle of the week, right? We usually look for that the first day or two of the week to be like the fake move or the false move, if you will. But like I said yesterday, it was very difficult to get into this thing, and I'll show you why. So right here was daily resistance, and then we got a higher close there. So yesterday I took a short on it when we were retesting this area, and you can see how we got 2 hours of straight upside there. Well, obviously that took me out. I didn't have a stop loss this high, so I missed the trade. I didn't take it later on in the day. That's not how I roll. But I'm glad to see it finally starting to make the move that we were looking for. Now, just because I'm able to make these fantastic calls and stuff like that on a regular basis does not mean that every single time I'm able to translate that into money. For instance, we've been looking for Bitcoin to roll over since Thanksgiving. In fact, I put a video out about it. Let me see if I can get it to pull up. Right here. This is the video 2 months ago talking about why I was looking for Bitcoin to roll over. If you haven't checked that out, go check it out. The thumbnail just says wait, because I said in the video that you're going to get a better opportunity. You're going to be able to buy Bitcoin cheaper. Now, obviously, when I made the video, it was only around 38 or 39K. So we're just now dropping back into that area. So yeah, typically or you would have missed all this upside here, but I mean, unless you took profits on the move up, it doesn't matter, right? Because now we're right back to where we were when I made the video. And I do expect it to continue to pull back. I expect it to at least test December's open, and that's down here. It does not mean it will. It's just what I'm looking for, since we have broken down. And we did break down with high volume. So that kind of confirms the breakdown. Right there you go. You got ascending volume and boom, the breakdown. So Yeah, I would expect Bitcoin to test at least December's open. I don't expect it to test it in a straight line ever. Markets ebb and flow. They make swing highs and swing lows, swing highs and swing lows, but ultimately I do expect December's open to be tested. Now, whether or not we drop back into December's range is a whole nother topic. But yeah, we were looking for the dollar to roll over. I don't think it's going to help Bitcoin, just simply because of all the outflows going on in GBTC right now. So we'll see if that stops or if it continues. Either way, I'm expecting a test of 37K. If it breaks below that, where is the next level that we would be looking for it to get to? Well, it would be all the way down here to 34K, which would be November's open. In that video, I make a bold claim and I say that there's a potential for it to take out Q2's low. I don't think that's a possibility at this point any longer, but you never know, right? Q2's low was not liquidated when it made this move to the upside. And if it were to break down there in like the next 2 months before the halving, that would look extremely bearish. And then that would be the area where I definitely look to be buying or going long, not necessarily buying, but going long, which is buying, but you get what I'm saying, right? I'm not going to buy more Bitcoin. I already own a lot of it. So I'm just going to keep trading it the way that I have been doing it. And I don't, like I said, I don't know if it's going to get all the way down there or not, but we'll just keep watching the monthly opens. And if Bitcoin breaks down into like November's range, then there's a possibility that maybe, the midpoint of that range could hold. We don't know. But I do believe that we are going to see a pullback all the way until the halving. I don't think you're going to see Bitcoin find support anywhere up at these prices. It is possible that it does. It's just the halving is still a pretty far distance away. So we could see a lot of sideways price action and, maybe in this area, right in through here, would make a lot of sense. So we'll see what happens with that. But I missed the short on this as well. I tried to get short on it twice, and both times I was stopped out. So yeah, that's being able to make the right directional call means nothing if you can't make P and L. And that's our job as traders, is to basically get paid on these moves, not to predict them, but more or less to make money on them. So let me see. What's up, everybody? Good morning. Good morning. What's up, traders? Caught that trade at 0686943. Good job, Chris. I would just hold it, bro. I mean, take profits, obviously. You always want to take profits because we don't know if it's going to have downside continuation or not. I would expect it does, because if I'm assuming retail has probably been trying to get long on this, because retail is always trying to pick bottoms, right? That's what retail does. Like, retail doesn't look at the long term. They think that they're going to pick the bottom and it's going to go up forever. And that's not what happens. They are able to catch trades, obviously, in there. Like, if you would have bought anywhere in here, you would have made some money because it did indeed go up. But it's going to roll over, and it's probably even going to take out these lows, because that's probably when retail started to get long. So we'll see that play out, and it'll probably look something like that. So I would take profits since you've already gotten a big move today, and then just move your stop to break even and just hang on to it. Hang on to it. All right. So let's see here. GIS. All right, so General Mills, the reason that I got a short on this is probably wrong, but I'll show you why. The moving average structure is obviously bearish. You got the 200 above the 100, 100 above the 50, and the 21 below the 50. But the problem is it closed above resistance yesterday. So that's the level that I was watching, and I expected it to close below it, but it didn't. So if we make a higher close, I will close that GIS position out. When I took the short, we were under the 50. So I it is possible that this ends up being a bear trap. What in the world? Wait a minute. Give me 1 second. Something is epically wrong with my computer. There it is. All right. All right, so there is a very strong possibility that this ends up being a trap, a bull trap, because the structure is bearish. But General Mills is a good company. Obviously, they make money, right? So it just the structure was bearish. All I was doing was going through the S&P 500, and I was looking for something to either go long or short. And this met the criteria to go short yesterday, but today it does not meet that same criteria. Today it actually is a long. I wouldn't go long because obviously, like, it's had a pretty vicious down move recently, and I just look for continuation. So it's just basically a continuation trade. We had a massive drop here, and then we've consolidated those losses. Every time the Bulls had a chance to drive this thing up, in steps the Bears. So there's got to be a reason for that. Hence the reason why I bought some puts. But if it closes a higher candle today than yesterday's close, then I'll eat a small loss on that. And then I'll just wait for it to either drop back under 64.38 and look for short positions, or I'll just leave it alone and find something else to trade altogether. But yeah, that's that. Where is Euro? My whole watch list got screwed up. So Euro put in a bear trap, closing yesterday's candle below support here. And this is December's open. So I was expecting it to act as support, but we did get that close under. But now we're back above it today. So as long as December's open holds and we don't close back under it, then I'll be looking for long positions on the euro around there. And that is 1.08880. All right. On that. The Aussie yen trade, it's just not working out. It's not coming to fruition. We did get a nice move on it, but then it broke back down. It held support here and gave us another opportunity to get long, but it's breaking back down. So it's doing what it likes to do or has done for several months, and that is trade sideways and choppy. So if the BOJ ends up hiking interest rates, which the guy, I read a guy's thing on it yesterday, and he thinks that they could hike rates as soon as July, the BOJ. If that's the case, then my long thesis on this is going to be completely wrong. That will give the Japanese yen a bullish move if they hike interest rates. So it would not be a bad idea to potentially look for shorts, but we're still a long ways from July, right? But markets will price in those things. So you got to think, if we're 6 months out or 7 months away from a potential rate hike from the BOJ, but if UADA, which is the BOJ president, almost confirmed that they are going to hike rates on the last BOJ meeting we just had 2 days ago, then it might not be a bad idea to start looking for shorts instead of longs, because the BOJ or the yen will get strong. Now that's hard to believe. I understand that, seeing how this thing has been so weak for so long, but it is what it is. They got to do something. So we'll see if that happens. So this could actually be a long trade, the Japanese yen. You can either trade yen futures, look for long entries on yen futures, or we can look to short it via something else that's weak, or the weaker or the weakest currency. And I was wanting to see, as of right now, that's yen. Swiss franc has been strong. It's moving to the upside. That's a very good move. Euro is not weak right yet, but it could be in 6 months. Same could be said for the pound. And the pound is still holding that trend line. Last quarter, you did break out and close above the previous quarter's range. So it might be about to break out above this trend line, but this trend line is essentially held on log. Off log, it doesn't work. All right. So, but on log, it does. And we were watching this trend line when it was back in here. And we did take a short based on that with some other factors. So we were able to nail nice short trades on the pound. But it was pound versus the dollar. So there you go. Right? Boom. Down it went. It does look like it's struggling here, but it doesn't look like it's going to hold any longer. If the dollar remains weak, then we can expect pound and euro to move to the upside, right? And we are trading above December's open currently. Not December's open, sorry, December's close. Why is caps lock on? It don't matter. That's definitely a level that I'm interested in. And you can see that it is basically contained price. So if we're unable to close above this, then I'll probably look for shorts. But if it does close above it, I mean, it's structured bullish here. So we're probably going to see a breakout on this. That's if we get continuation of dollar weakness. And I do think you're going to see a continuation of that. That's the way it's structured anyways. It looks pretty bearish to me. Apple, I said this was probably a buy. It was. It's right back up to 194. Amazon, fresh all-time. Oh wait, fresh yearly highs today, but it's melting. Meta, fresh yearly highs. Goog, fresh yearly highs. Microsoft, fresh all-time highs. Nvidia, fresh all-time highs. So I can tell you something right now. Nancy Pelosi's 120 calls that she purchased $1 million of is looking pretty damn good right about now. Let's go look exactly at what, because she paid $380 per contract. Let's go see what those puppies are trading for. Well, if you want to be like, oh, there it is. She bought the December 2024 120 calls, and they were trading for 380. Woo! Damn. 495. So she's made over $100 per contract. And I think she bought 50 contracts. Damn. Damn. So she's making some good money there. Making some good money there, Mrs. Pelosi, who wants to turn the country into a communist state, but yet she's taking very much, she is partaking in the free markets. And she does a really good job at it, or her husband, I should say. But anyways, that's neither here nor there. Fresh all-time highs on Nvidia. Tesla is just not like participating in this rally. And you got earnings today after the bell on Tesla. So a couple of the trade talkers inside the Discord are looking to get long Tesla. Unfortunately, let me pull this up. Unfortunately, you're going to pay a premium for the contracts. You can see here your IV is 117%. So in order to even participate on this, you would have to come all the way down to here. But that's 205 days out. So you're looking at a lot of money. So maybe here you got a 51% implied vol there. So 51 days would probably be the best place to look. Jesus. For that play. But unfortunately, the skew is going the wrong way. We need that going up, right? So we need to buy a low implied volatility and then sell a higher implied volatility. But we can't do that because the skew is all jacked up. So since the skew is all jacked up, it's impossible to put on a bullish position. That's not too bad. $85 would be the loss. Yeah, that's bad. But that's also freaking a $7 wide spread. Yeah, it's I can't put a position together. Like I can't beat that skew. There you go. There you got a 2-to-1 risk to reward, but who wants to risk $330 for it to say it's going to go higher? We don't know if it's going to go higher. They could miss on earnings and this thing could be gapping down all the way down to here tomorrow. But then again, if it beats and beats hard, you will get a big move to the upside. But if you want to take a bet and like, I mean, that's what most people do, right? They buy the very expensive ones way out of the money and they hope to get, they hope to get paid. And that's not likely, but you could if you wanted to. You could give it a shot. Anything above 222 is not expected. So I'd probably buy like the 217s if you can afford that $400 loss. I can't, not on my small account. So I can't participate. But just understand something. Tomorrow, that volatility is going to get crushed out. So it's at 100% now. Tomorrow, it'll be at 60. So you're going to lose a lot of money on that. You're going to lose quite a bit of money on that implied volatility crush. So just be very careful. You could do a calendar spread or something like that if you wanted to. So that would basically you would be taking a bet on both the call and put side, and essentially all you'd be looking to do is capitalize on this vol crush. So you could set that up with a vertical spread on this expiration and then on this expiration, or you could go maybe 2 weeks out as this expiration's got a 60% implied vol. So, I mean, there's many different ways you could play it, right? But those ways are all going to be, it's going to be limited as to how much money you can make. Whereas if you just go out and buy an out of the money call, you're risking whatever you pay for the call. And you need a big move on it to basically make money. So we'll see what it does. I would assume that Tesla probably is going to hold support here. And I don't know what that line is. It's nothing. All right, it's last week's low. That's all it is. This line is just last week's low. This is the support, the daily support. And you got November 2023's open there. And that's what it looks like. I mean, that's a disgusting candle. Disgusting. So unless they miss big, I don't know. I mean, it just looks to me like this was a pretty heavy sell-off. And it started literally at the end of December. So it's basically a January sell-off. Right? You can see 2024 is open up there at 250.08. Oh, is it possible that it's just setting a monthly low and then it's going to trade right back up? It is, but it's the 24th day of January. So you're not going to close it as a bullish candle unless you get a massive move. And they would have to be huge. And I don't think they're expected to be. I think that's why they got the sell-off. Because of poor sales expectations or something like that. We'll see what happens, though. Either way, I don't think I'm going to get involved in it. Because you'd basically be betting on it that it's going to go higher. Which this was a pretty one-sided move. It makes sense to me that it would go higher, probably. But if they miss, Tesla could be trading down at 192 in a few days. So just be careful. Make sure you understand your risk. Make sure you understand it all fully before you take that YOLO play on Tesla. Um, can I look at AI? Yeah, we've got AI on the watch list. We've been taking a look at it. Unfortunately, it did bounce from this support down here, but it's such a heavily shorted stock. We were looking to trade it when it pulled back up here. We were looking for it to find support. It just didn't. So I mean, if you're trading it now, you're essentially just trading it for the range. Like say maybe it could go back up there, but the trade would have been on Friday. You would have been looking to get long once it pushed down here to this support level. That's where you would have wanted to get long. You don't really want to get long now because you're almost in the middle of the range. And those sellers came right back, at least for today. So I mean it is keeping within this trend here. So I mean I don't know, right? In order for that short squeeze to happen, it would have to get above $34. And then you could see this thing really take off because it is very, very heavily shorted. I think last time I looked, it had a 30% short float. It's up to 38%. Yeah, this thing could definitely rip. It could definitely rip to the upside. So, I mean, it's not expensive if you trade the options. You got plenty of time. You got 37 days before you got earnings. See, the options are not very expensive on it. You could look to potentially buy a call or something. But yesterday's close has to hold. So maybe if this thing, I mean, the trend is down, right? The structure is bearish. The trend is down. You just got a death cross on it. Like literally just got a death cross on it. So buying it's the green and the purple moving averages that makes the death cross. So yeah, I mean if it could potentially start squeezing up at 30. We'll keep this one on watch. If it closes above 26.42, we may buy a call on it or a spread to eliminate the risk. And this one's going in the right direction. You can see how this is 69.13 and then 69.48, 69.50. Then you up here you get into the 70. So this one would work. The problem is you're going against the grain. So here's a $4 wide. You could put a $4 wide spread on for a max profit of 263 and a 137 max loss. So that's pretty much a 2-to-1 risk to reward, and you're only paying $1.37 for the spread. So that's not bad. It's not bad at all. That one would work. The problem is like I said, you're going against the trend. $1.58 for a max profit of 342 for a $5 wide spread. We may put it on. It just depends on how it closes today. All right. If it closes above 26.42, then we'll think about it. because it just simply based on the fact that it's so heavily shorted. As far as the like trend play, it's not, right. It's definitely sideways. It did get a pop based on the whole AI hype, but you got to remember they're only buying it because of the name. They're not buying it based on the company. It's heavily shorted and they don't make money. Negative 262 mil. That's their income. They're literally losing money. So, yeah, I don't know if I like it. It would be based only on you're looking for a short squeeze to happen. But I mean, you could risk 1% of your total account's equity on the trade to see if it happens or not, right? Hopefully that helps you. How many pips do you usually take profit? And that would determine on the risk. If I risked 50, like if I risk 15 pips, I look to take profit at 30 pips, but there's more to it than that. There's structure and all that that's involved as well. Like you don't want to try to just because you want to make sure that you're risking a specific amount of pips and then the profit target would be within support. So, like, if I would have gotten short up in here, for instance, then I would have been looking to take profits before support. So, I would have had to have a really tight stop because there's nothing that guarantees you're going to go down below support, right? And we can't see into the future. So, I mean, it just depends on the setup itself. Generally, when we take trades on FX, we're looking at specific setups. We have a specific risk in mind because we have a specific target, right? You always have to have a target, and that target must be within the range. You cannot expect a target outside of the range because when you do that, you're basically telling the market what to do. And that doesn't work out very often. So basically, when we take our trades, we're looking to take the trade within the range and we never look for it to break out. But you have broken out of the range. Yesterday's range would be from low to high. So I would have been looking to take the trade roughly around daily res. And then I would have been looking to take profits based on the intraday structure. There's a lot to it. It's not just I don't look for a set. It's not like I look for a set profit target or I'm looking for a specific amount of pips. It's never that. I'm never looking for a specific amount of pips. I'm always looking for a 1% risk, so a 2% reward. And then I'll take profits, move my stop to break even. But I will always structure that trade around intraday support and resistance. Hopefully that answers your question. Yeah, I wish I could be like, well, I'll only take. Usually we're looking for about 15 pips for the stop, so about 30 pips on a profit target. But then obviously, if you get the breakdown, so entry would have been roughly in here somewhere, and you can see that would not have been a good profit target. Just to the first support would have been 11 pips. This is the support I'm talking about. Even though it didn't hold, it held for 1 hour and 1 hour alone only. So at the London session, you set this little swing high in and then broke below support. Yeah, it's just based on a whole lot of factors. No trade is ever the same when it comes to Forex. Um, Thank you for the call on that trade. You're welcome, my friend. Good morning, says Bravo. Nancy, our queen. Good morning, good morning. Technically bullish. How are you doing? All right. So that's pretty much that. Let's see here. Does anybody have a stock in mind that maybe fits the parameter of a setup? I haven't even looked at yields this morning. What are they doing? Nice. See, the long end of the curve is going up higher. It's up 0.11%, and the 20 years up 0.04%. The 10 years down 0.05%. This is definitely a bear steepening. The 2 years down 0.7%. So all the yields are structured in the right way, finally. Yeah, finally. But it's bullish for stocks, but typically bearish for bonds. That's why it's called a bear steepening. Bearish for bonds, bullish for stocks. And stocks are loving it. Netflix had earnings yesterday. They gapped up. They're up 13% today. They beat earnings. It says that they did not beat earnings, but that's only on the top line. They did beat, and they added I can't even remember how many new subscribers. So I would expect Netflix to probably continue its way to the upside. So next Tuesday we'll have AMD earnings, but AMD's freaking all-time high in it. Maybe we could get long Intel. I hate getting long something that's already been overbought. This would have been the area to get long. As long as support held, and it did. I mean, what a beautiful test of support right there. We would have bought calls on Intel right there if I would have just... Man, I need a scanner. I need a scanner. I need to fix that thing. Because that's a perfect bullish setup. Got support. You trade down into support. You're bullish. You get right to the 50. You get long. You buy the $45 strike, and then boom, you're up. Everything else is overbought. Except Tesla. Tesla's oversold. So, I mean, yeah, I could see people buying Tesla based on the fact that it's oversold. but it would be a bet, and we already looked at it. I can't put a trade on it where it's justifies the risk to reward. But a lot of stocks are going to have earnings. I made it all the way to the H's. This is the whole S&P 500 right here yesterday. Oh, I did put on a couple. Let's see, EMPH. Was actually looking for this to get up and test the 50, and then we could short it. So this is going to stay on watch. We got a resistance up there. So if we do get that 50 test, we will look to short it. But you got it there already. So it may be done. I know that the last time I traded this, that they had said in their call that they were going, they put aside $1 billion for stock buybacks, but they don't make money either. Oh yeah, they do. They make money. We'll see how what this one looks like in the next few days. It's not a setup right now, but it's getting close. This one is also a potential setup. Looking for the short, but we missed it. Damn it. That would have been a short to take on the open. So we'll watch eBay one more day. Maybe we can get a retest of the midpoint or either a mid resistance test tomorrow. And then we could buy puts on eBay. Adobe, another one. But I think I looked at this one, and the reason I didn't take this was another one that we could have taken today. Was a retest of old resistance. Here's the breakout. There's the pullback. It held support at yesterday's close. Should have took it yesterday. I put it on the list and just did not pay attention to it. But I think I looked at it and I couldn't get a spread on it. Yeah, I think that's what it was. Because you're looking at 243 max loss versus 257 max profit on a $5 wide spread. If you do a $10 wide spread, it's going to be much worse. Yeah, you're risking 500 to make 500. That's the reason why I think I left it alone. But it worked out beautifully. So that's the setup that I'm looking for, right? But we're looking to buy stocks that are bullish when they get above the 50 and they come back in for a retest at a specific resistance area. Like, this is it. This is the play. And we would be taking profits right now on it. ZM, my only problem with this is they are so busted. Like, that looks so bad. If it was in an uptrend, it would be different. It's just not. So maybe if Zoom can hold $69, we'll take a call. We'll buy a call on it. It held all week. It's just old resistance. You can see how this bearish candle came into play, right? So it's more or less old support. There's the breakdown. And then this support came in and held. And then you got the push up. Resistance held. So obviously this is the range. It's a dollar wide range. How much are the calls on this one? $3. But yeah, this one I'm gonna get rid of because I shorted it. I took profits on this candle here when it made fresh lows. I'm glad I did because it's right back up again. I'm gonna keep this one on watch though. This could be a short again. I'm going to watch 74.79. If it fails to close the daily above that, I'm going to short this beast again. Let's get rid of Airbnb. Airbnb is nothing. DAL, this is Delta Airlines. I actually had this on for a long-term buy, but then that Boeing news came out, and then yesterday another Boeing plane had a freaking wheel fall off when it was making a turn before it started up the runway. So that would have been tragic. But I do know analysts like this stock and they like it for the longer term hold, buy and hold. DocuSign, it's just massively overbought. It looks like it's flagging out, but I mean, damn. If it can hold support, though, I mean, I would probably rather want to wait and see if this thing can break out and maintain the breakout first. The fact that it got up to the 70 on the RSI and then failed, I don't know. This thing could be getting ready for a big breakout here. This was the buy on DocuSign. This was the old support that we were watching. But then it broke down and we said if it ends up being a bear trap, we could buy it, but we missed it. We just missed it. This thing is flagging out. And since it didn't rip once it got above the 70 and the RSI is pulling back, as long as this thing doesn't close below 61.26, this could be a buy. Because it is definitely flagging out here. And I love the way that it did not. Usually when a stock gets above the overbought, that's when it really presses hard, right? Like moves strong is once it gets to the overbought because literally you're stopping shorts out. But it has a very hard time trading above $65 since the bear market. It's had a very difficult time staying above $65. But that is a pretty confident move right there. A nice, awesome, beautiful pullback, and then boom. So yeah, we might be buying this one. Let's go check out what we got here. Damn, that spread, man. That's $1 wide. Never mind. Do not ever trade a stock that has $1 wide spread. Look here. This spread. That is bad. Look at this. That might be this platform. Let me check Docu's sign on Thinkorswim because that just does not even look right. Where are we at? 37 days out. Nope, that's right. That's right. Here's the at the money calls. $1 wide. At the money calls. $1 wide. That is bad. So forget about DocuSign. It could be because it's got 54% implied volatility is not terrible. So this one is going to be a strong, hard pass for me. But if you guys want to trade it, be my guest. But with $1 wide spread, it's going to be impossible to get filled. Do you realize $1 is $100 per contract? So if you buy it at 440 and it goes in the money $1, you're only at 395. So you lose money even if it goes up $1. Unless you get lucky enough and get filled at, I don't know, some crazy price. Somebody's trying to get filled at 580. What an idiot. Literally, you seen that tick up from 4 something to 580? Because someone literally put in an order there to get filled at 580. Why would you bid at 580? It's on the other one too. Options are always going to be the same on no matter what platform you look at because this is SIBO, right? The Chicago Board of Options Exchange. They're the ones that price the options. They're the ones that control the bid and the ask. That is pathetic. Somebody just went in there and dropped let me get a call for $5.80. What is wrong with you, bro? You would need it to get all the way up to 50. You would need this thing to go up $10 in order to just break even. Oh my God, people kill me. Obviously, whoever that is does not know what they're doing. But they are not going to get, which I don't believe, I don't understand why they didn't get filled. I'd fill them. I'd give it to them for 580. All right. Anyways, let's go see Mara. Yeah, Mara trade. I guess I could probably get rid of that because that's already been done. COP is an old one too. Philip Morris is an old one we were watching to see if it could hold support. It did not. ADM was a short, I think. Or were we looking for long? I can't remember. Yeah, I think we were looking for the short. Damn it. Should have held on to that one. Well, anyways, that's no longer irrelevant. Pepsi might be trying to hold support. We'll keep that one. CLS, we can get rid of. PayPal. We'll hold on to that one. JP Morgan, XLF, A&F, Abercrombie and Fitch. I don't know why I even had that one on the watch list. All right. Good morning, all. Can we take a look at coin, please, Heath? Yeah. I mean, with Bitcoin going down, you gotta assume that coin and all of the Maras and the riots are gonna follow suit, and it is. So I mean, one could argue that it's getting close to an old swing high, and maybe it finds support there, but coin will find support when Bitcoin does. Bitcoin's literally, I mean, yesterday it closed up and today it's currently up, but we're not expecting Bitcoin to go up. We're expecting it to trade sideways to down. So as long as that's the case, I would expect coin to do the same. So we could sell calls on coin. Let's see what it looks like. Because it's got a nice implied volatility. Man, I wish it was up on the day. Oh, never mind. That's why it's got so much implied volatility. This thing moves. I wouldn't feel comfortable selling calls for less than 163. And that's way up here where they ain't worth nothing. What are the days away? What do the 2 days look like? Come on. We might could sell a call and just hold it for 2 days. If we could, as long as we don't get a massive bullish spike on Bitcoin, we'd be safe. That is, of course, if it'll pull up the quotes. Yeah, we could make a quick $50. Oh, no, we can't. Buying power too much. Never mind. I can't. If you can, 2 days to expiration, I would sell the 134 strike. Just sell it. And by tomorrow evening, you will have most of that profit. I know $50 don't seem like a lot, but when you can do that over and over and over and over and over and over again, it adds up. But I can't do it. I don't have enough buying power in the portfolio, especially since I'm in two positions. Rad USDT, I'm looking for a long if daily support holds. Well, you're at daily support right now. This thing does spike. Yeah, if daily support holds, technically you could look for a long here. So wait for the close. Is this tradable on weeks? No, it's not tradable on weeks. Hang on, before I say that, let me make sure. Nope. All right, so it's not on weeks. I was gonna trade this one with you if it holds support, but I can't trade it because I'm using weeks. If you guys want to use weeks, there is a link in the description, and you will save 20% on all fees, all trading fees. But it'll take them a little while, but they'll get most of these on there. They're a new exchange, so it takes a while to add these newer ones. I haven't never even heard of this before till you just said to look at it. But yeah, if it holds daily support, arguably you could potentially look for a long. It doesn't mean it'll work, so don't go 100x with leverage and, you know what I'm saying? Bet the farm on it. Just risk 2%. We don't risk more than that on any single trade. 1% is preferable. But it is definitely at a spot. If it holds, you could potentially see a bounce. And if Bitcoin dominance is going down, it would help. It's not. It's popping back to the upside. So if dominance falls, then Rad could potentially bounce there. I like what you're looking at there. Not bad. It's a pretty decent setup if daily support holds, Mr. Ivan. Grayscale preparing another 700 million sell. Prepare the dump, my guys. Yeah. Can I look at Bitty? And where do you see a good enter? Well, I don't have Bitty, but I will look it up. This is a short. So basically what you're looking for is to go, what, long this? It only goes down. I wouldn't even trade this. It only goes down. I know you're thinking if Bitcoin crashes, this is going to go to the moon, but we're not expecting a crash. We're just expecting a pullback, and that's what it's doing. Just pulling back. This is not a crash. You would need a massive crash for this thing to spike. Lovely. I don't see an entry. I mean, based on technicals, I don't see one. I guess if it got down here and held, maybe you could buy it then at 13.19. But this is a trip. Is this triple levered also? If this is a triple levered one, this settles every single day. Make sure that you read the fine print on this thing, because if it's settled every single day, then you could be in profit today and wake up tomorrow and not be, because it settles and changes every day. That's why nobody really trades these things. It is set more for a day trading thing, but I mean, today's entire range is just a few pennies. 1378 is your high and 1363 is your low. So I mean, it barely moves, or it's barely moved today. Um, Bitcoin is, I mean, it's been going down, but like there's not even really a short setup to take on Bitcoin. Like on the futures, I'm looking at the screen right now, and there's nothing I love about it, especially since the dollar is melting today. So just be careful trading these things and make sure you read the fine print. I don't know anything about it. I've never traded it. I mean, I would just rather short Bitcoin because then I make more Bitcoin. But I mean, as far as if you're just trying to make dollars, then watch 1319. That's daily support. I mean, technically, Monday's candle could hold either the open or the close, right? I mean, yeah, that's where it tested it now. So yeah, I mean, you could try to buy it now, but it doesn't mean the trade's gonna work. Just make sure you manage your risk and make sure this thing doesn't get resettled every single day, because if it does, you need a big movement on this in order to make money. What you need is you need Bitcoin to crash for this thing to make serious dough. Because just because it looks like it's moved from low to here 22%, that doesn't mean that you made 22%. You potentially only made, if it's triple levered and it's also settled every day, then you divide this by 3 and that's what you made. So you made like 6%, 7% on this move, which isn't bad, but yeah, we could with the dollar melting, Bitcoin could go up a little bit higher before it finds resistance and rolls back over. I would just keep an eye on Bitcoin. See, isn't really testing any level that would be sufficient to short. Like if it gets back up here to weekly support, then we could look to take a short entry on it. But down here, like there's really nothing to justify taking a short entry on it. Especially the closer and closer it gets to being oversold on the daily. We need it to pop up before we can take a short entry on it a little bit higher. $40,000 is a big figure number, and people will be, trading that. Whether you're buying or selling 40,000. Yeah, I mean, not so much on Bitcoin, but I've seen it, big figures work on Forex and stocks a lot, indexes. But it does look like 40,000 is what's keeping it down, or that's where the heavy volume is. We can go in intraday and look where the heavy volume is at. See if it's at 40K. Yeah, it's a little bit under 40K. It's mostly buyers today, not selling. It could be a short covering rally. But you can see how the volume spikes right here around 40K. Yeah. I mean, I can't short it at 40K. I need an actual technical level, an objective price. I mean, $40,000 is an objective price, but there's no objective resistance to take the short. I mean, you got to spike above it there, close above, then it looked like it was going to roll over based on this resistance. And it only rolled over for 3 hours and then boom, right back up. So this is where traders get really just destroyed because they're trying to literally take a trade based on intraday levels when daily and weekly levels actually work best. That's what your 3 day looks like. That's what your week looks like. At best, one could argue maybe the midpoint of this weekly expansion. That's basically what it's struggling at. The midpoint of this weekly expansion. But there's no objective level to base the trade off. Yeah, just be careful with that BITI thing, man. I would rather see you just trade, Bitcoin. But if that's all you can trade, then watch daily support. No problem, Clipper. All right, we're going to go ahead and wrap this up. We've been live for over about an hour and a half now. I'll keep looking for stocks. I'll keep looking for something to trade. There's got to be some setups out there. But in the meantime, make sure you guys trade safe, trade smart, and as always, happy trading, everybody.